2.8 million acres of corn and 5.2 million acres of soybeans hit by the derecho winds just in Iowa. We are going to speak about that and several other issues involving the farmland in the United States. Here to weigh in on your pocket, on the farmer pocket, is Mike Zuzolo, president of Global Commodity Analytics, and he's going to share about his projections about the crop in the United States. Mike, how are you today?
Thanks for having me back, Luis. I'm doing well. I hope you are too.
Yeah, I'm doing great this afternoon. So I saw the USDA data updated about Iowa. We are speaking right after the Rachel wins, and we also are speaking after the Pro Farmer Tour. How do you think that is going to impact the market, and how does that update your forecast for the crop?
Yeah, that's a very timely question because we haven't seen the final yield data from USDA yet as we go to this week's show. But I do think, Luis, based upon the way the corn and bean prices are trading, that we are putting in pro-farmer price pressure, that the trade in futures markets is working fairly hard at pricing in and discounting the futures market for new crop corn and new crop soybeans because of the tour. Expecting that even with the derecho wind problems in Iowa and northern Illinois, that the Pro Farmer Tour will essentially come very close to the USDA's national yield from its August report. And I think that's what the price action's been showing this part of the week that we are looking at here before we go into Friday's close. I think the other thing that I would say to you to answer your question is that the national yield projection that I have is below 180 bushels. It remains below 180 bushels because actually the Twitter feed on the Pro Farmer Tour has helped me solidify and support and give me confidence in what producer clients are telling me on the phone and have been for over a week, that they are losing yield. They have had lost yield potential because of the hotter, drier weather, that the corn is indeed tipping back and not filling out all the way to the end of the ear. And pod counts, while they are high, are not going to fill out very well, and in some cases are starting to drop off of the plants. One client just called me today in Indiana, and I had talked to him 2 weeks ago about this, and he said, and he's in a very good growing area. He's in an area that should be up at top end yields based upon how the crops look from the road and the weather pattern up until the end of July. And he was 2 weeks ago telling me that he could see record yields in his area. Today, he told me he had walked fields. He had seen a significant amount of tip back in his corn. And instead of being close to 240 bushel yields, he's now back to 210 bushel yields. And so it gives you an idea that this weather we're having here in the United States, not just because it's been relatively warm, but because it's been very, very dry and very, very arid, the corn is drying down very fast. And the Pro Farmer Tour talks about that and notes that, but I think the market is skeptical that that will get built into their final yield number at the end of the week.
Yeah, I just saw today a new report published by the DTN Progressive Farmer website, a very popular website in the United States, and they see a record low on farm confidence. So, do you think that is related to the Rachel winds, or do you see that more related to the macroeconomic side and spikes on coronavirus cases?
Yeah, I mean, I think it's certainly related to COVID because of the issues with transportation and supply chain issues and very high retail beef and pork prices, keeping demand for beef and pork, consumption levels for beef and pork while elevated, not as strong as they could be if prices were cheaper. The beef price in July was over 11% higher than July of 2019 from USDA's update. Pork prices up 6%, over 6% in July versus July 2019. I think, though, Luis, what we're really feeling out of that index is what another pro-farmer index shows, the National Cash Corn Index, just recently went back down to $2.90 a bushel. Farmers just simply cannot make money, and they cannot offset losses with government direct payments at that price level, especially if they find some of their corn yields going backwards. And so in the case of that Indiana farmer, a 30 bushel less yield times $3 corn is a significant amount per acre that he will lose in revenue. You're talking about $90 an acre in revenue lost just in the yield loss because of the hotter, drier August weather that we're having. The futures market hasn't picked up on this yet, and it still reminds me a lot like 2016, and that's essentially why I've been banging the drum hard for feed clients to get their corn needs locked in, because I think between the pasture conditions here in the United States and the corn crop shrinking at this stage, the feed needs really need to be looked at hard here.
We are seeing strong forward sales, and I'm speaking today from Argentina, and Argentina's just sold 2.5 million metric tons of corn for the new crop. That is 26% higher than last year. Do you see that is related to these corn prices?
To some degree, but I've also seen where the corn prices in South America have been gone sharply higher, both in Argentina and Brazil. And I have to bring back into the conversation the Ukrainian corn crop, because that has been such a competitive feature to our U.S. market here in the last 3 to 4 years. The Ukrainian ag minister is looking at a 35 million metric ton corn crop, close to what I'm looking at. I'm a little over that at 35 and a half. But the USDA is at 39.5 million metric tons. That 4 million metric tons would, if it were that much lower, would take quite a bit off of the export potential for Ukraine. And they are in the advanced stages of wheat harvest, almost wrapped up. And I think their corn crop is pretty much made or not made at this point, very similar to what we've been dealing with here in the United States. And so you throw that into the mix with what you're talking about in Argentina, and then you throw the flooding of China into the mix as well, and China continuing to buy U.S. corn this week. And I think you have a very strong reason to believe that downside in the futures market or downside in the U.S. corn market is probably limited at this point until we really do know the supply here in the United States. Because, as I said, we were just at $2.90 in the United States corn index by DTN just a week ago, and that's down there around a 4 to 5 year low.
The demand side, you have been watching the floods in China, and you are seeing a rally for wheat in a long time. You think other crops can get a rally still? And by the way, if you like to follow all of these trends around the world, go to globalanalytics.biz and sign up for a trial. Right.
Yeah, I mean, this is where, Luis, it's going to be very difficult to get a good picture of what's happening in China except through the export data and their purchases between now and the U.S. presidential elections. We've talked about this quite a bit, and I think we're on track with what you and I have talked about in that the Chinese, I think, need the corn and need the soybeans and need the wheat, and that wheat is our leader. We have gone down and tested the $5 level in the soft red wheat at the futures market in Chicago. That's a very key support level. If we can hold that support level, I would call that a demand low. And that with USDA's last WASDE report and the world ending stocks not jumping too dramatically and production actually going down, wheat should be able to continue higher as long as the dollar doesn't spike and we don't have difficulties between the United States and China in their trade negotiations, which has been shown now that they are going to meet in a few days. And so right now it looks fairly good on a trade situation in terms of the U.S.-China relationship, but that is going to be the key issue heading into the U.S. presidential election for me. And the best way I can measure that is through the export demand, and also through whether the U.S. dollar becomes a safe haven currency again.
What about the macroeconomic data? It seems to be very confusing because the Walmart and Target have released very strong sales in the last quarter, but at the same time, unemployment claims have risen, and some universities are closing again. And you mentioned about the livestock rallies that are not coming for livestock producers.
Well, I think that rally is going to be more difficult to attain if we have the continuation of these COVID spikes all over the world. It's not just in the United States, but it is very bad in the United States right now with the deaths. I think the U.S. deaths hit a brand new 1-week high just this week on Wednesday, I believe it was. Luis, this is where it goes back to the issue of when we get to the beginning of the grilling season, the beginning of the driving season, the beginning of the summer, we were coming off of the COVID negativity. We came off that very, very strong. The demand was very strong. And as you said, they had some very good quarterly earnings in some of these major consumer companies and even shipping companies. Maersk, the huge shipping company, global shipping company for containers, its last quarter, its earnings tripled from what I read. But yet you have the railroads here in the United States, the total volume of railroad shipments and volume down about 15% from where we were last year at this time. So it is, I think, in part, the data that we're getting right now is data that was back from May, June, and early July. And going forward, late July, August, September, I'm very nervous that the data is not going to be nearly as good in the demand side, because I don't think the summer grilling season is finishing as strongly, or the summer driving season is finishing as strong, because of these major institutions that are indeed shutting down or going to all online classes. And pro football is a big question mark. We know that college football here in the United States is a multi-billion-dollar industry, and they consume a lot of hamburgers and hot dogs. So I think that the best data is behind us. And that's why we have to be very, very careful if we get rallies in the agriculture commodities, especially the cattle, to get some floors, some floor prices underneath us, a safety net underneath us.
Where are you seeing good opportunities for hedging right now?
Cattle, fat cattle are good opportunities. Feeder cattle clients are telling me it's good opportunity to get some hedges on here as far as profitability. The soybeans are very close. We were able to get close to $9 in cash soybeans for fall delivery in some areas of the country. And so if we could get a little bit higher than that, that would be a decent profit as well.
When corn gets close to $9?
When soybeans get close to $9.
Or soybeans, and then you think about corn.
Yeah, that's right. Again, going back to what you asked earlier, I still think the wheat market needs to lead the corn another leg higher. That may not come until the fall, though, when we know when the combines are running that the yields are probably not there, or the test weights are light again.
And you are not seeing right now ethanol as a great push for corn.
No, because I think the unleaded gasoline prices are too high, and we're going out of that summer driving season. So the ethanol price has started to climb in relation to the unleaded gas price. And so the margins are not much better than 10 cents a gallon right now, which isn't terrible, but it's not going to bring any more ethanol online in terms of production.
Mike, anything else to add?
Just have a great week, Luis, and thanks for having me.